Welcome to Invest and Empower. Before starting, don't forget to like and subscribe to our channel for more future updates. So, let's start. Cryptocurrency trading and investing. Cryptocurrency trading and investing involve buying, selling, and holding digital currencies with the aim of making a profit. Here are some key aspects to consider when engaging in cryptocurrency trading and investing. Research and education. It's crucial to educate yourself about cryptocurrencies, blockchain technology, and the underlying fundamentals of the market. Understand the different types of cryptocurrencies, their uses, and the factors that can impact their value. Stay updated with news, industry trends, and regulatory developments. Basics of cryptocurrencies. Start by understanding the fundamental concepts of cryptocurrencies, including blockchain technology, decentralized networks, and digital wallets. Learn about the different types of cryptocurrencies, their purposes, and how they function within their respective ecosystems. Market dynamics. Study the cryptocurrency market and how it operates. Familiarize yourself with terms like market capitalization, trading volume, liquidity, and price movements. Understand the factors that influence cryptocurrency prices, such as supply and demand, market sentiment, regulatory developments, and technological advancements. Cryptocurrency exchanges. Research different cryptocurrency exchanges and trading platforms. Compare their features, security measures, fees, available cryptocurrencies, and user reviews. Select a reputable and reliable exchange that suits your trading needs. Choosing a trading platform. Select a reputable and secure cryptocurrency exchange or trading platform to buy, sell, and trade cryptocurrencies. Consider factors such as user interface, security measures, available cryptocurrencies, trading fees, liquidity, and customer support. Security. The security of your funds and personal information should be a top priority. Look for platforms that offer robust security measures such as two-factor authentication, 2FA, cold storage for funds, encryption protocols, and regular security audits. Additionally, check if the platform has a solid reputation for security and has not experienced any major security breaches in the past. Regulation and compliance. Consider whether the trading platform operates within a regulated framework. Regulation can provide a level of trust and accountability, as regulated platforms are required to adhere to certain standards and practices. Check if the platform complies with relevant regulations and has obtained necessary licenses or registrations. User interface and experience. A user-friendly and intuitive interface is important, especially if you're new to cryptocurrency trading. The platform should have a clear layout, easy navigation, and provide access to essential trading tools and features. Look for platforms that offer demo accounts or tutorials to help you get familiarized with the trading platform. Creating a trading strategy. Develop a well-defined trading strategy based on your risk tolerance, investment goals, and market analysis. Determine the type of trading you want to engage in, such as day trading, swing trading, or long-term investing. Set entry and exit points, establish stop-loss and take-profit levels, and consider risk management techniques. Define your goals and risk tolerance. Start by clarifying your trading goals and risk tolerance. Determine whether you are looking for short-term gains or long-term investments. Assess how much capital you are willing to risk and how much potential loss you can tolerate. This will help shape your trading approach and risk management strategy. Choose a trading style. There are various trading styles to consider, such as day trading, swing trading, and position trading. Day trading involves executing multiple trades within a day, taking advantage of short-term price fluctuations. Swing trading involves holding positions for a few days to weeks to capture larger price movements. Position trading involves taking long-term positions based on fundamental analysis. Select a trading style that aligns with your goals and available time commitment. Technical analysis. Technical analysis involves studying price charts, patterns, and indicators to make trading decisions. Familiarize yourself with common technical analysis tools such as moving averages, trend lines, support and resistance levels, and oscillators. Develop a strategy based on the indicators and patterns that you find most effective. Determine your entry and exit criteria based on technical analysis signals. Technical analysis. Utilize technical analysis tools and indicators to analyze price charts and identify potential trading opportunities. This includes studying patterns, trends, support and resistance levels, moving averages, and volume indicators. Technical analysis can help in making informed trading decisions. Fundamental analysis. Consider the fundamental aspects of cryptocurrencies, such as the team behind the project, technology, adoption rate, partnerships, and community sentiment. Evaluate the long-term potential and value proposition of the cryptocurrencies you are interested in. Risk management. Implement risk management strategies to protect your investments. This includes setting a budget for cryptocurrency investments, diversifying your portfolio, and avoiding investing more than you can afford to lose. Consider using stop-loss orders to limit potential losses. Secure wallets. Choose a reliable cryptocurrency wallet to securely store your digital assets. Hardware wallets, such as Ledger or Trezor, are considered highly secure options for long-term storage, while software wallets and mobile wallets provide convenient access for active trading. Monitoring the market. Regularly monitor the cryptocurrency market, staying updated with price movements, market trends, and news that may impact the value of cryptocurrencies. Use portfolio tracking tools to monitor the performance of your investments and adjust your strategy accordingly. Price charts. Price charts provide valuable information about the historical and current price movements of cryptocurrencies. Platforms like CoinMarketCap, CoinGecko, and TradingView offer interactive charts that allow you to analyze price trends, identify patterns, and track market sentiment. Use technical analysis indicators and tools to gain insights into market dynamics. News and social media. Stay informed about the latest news, announcements, and updates in the cryptocurrency industry. Follow reputable news sources, industry blogs, and social media accounts of cryptocurrency projects, influencers, and industry experts. Twitter, Reddit, and Telegram are popular platforms where discussions and news updates occur. Market cap and volume. Keep an eye on the market capitalization and trading volume of different cryptocurrencies. Market cap provides an overview of a cryptocurrency's overall value, while trading volume indicates the liquidity and interest in a particular asset. Websites like CoinMarketCap and CoinGecko provide this information for various cryptocurrencies. Exchange listings and delistings. Monitor exchange listings and delistings of cryptocurrencies. Listings on reputable and regulated exchanges can increase liquidity and market demand for a cryptocurrency. On the other hand, delistings can negatively impact liquidity and market sentiment. Stay updated on exchange announcements and make note of any potential listing or delisting events that could affect your trading decisions. Community sentiment. Engage with the cryptocurrency community through forums, social media groups, and online communities. Monitor discussions and sentiment around specific cryptocurrencies to gain insights into market expectations and trends. However, it's important to exercise caution and conduct your own research rather than relying solely on community sentiment. Economic and market indicators. Keep an eye on broader economic and market indicators that can influence the cryptocurrency market. Factors such as government regulations, economic policies, global events, and technological advancements can impact market sentiment and cryptocurrency prices. Stay updated on relevant news and economic indicators to understand the broader market context. Price alerts and notifications. Set up price alerts and notifications on cryptocurrency tracking platforms or through mobile apps. This allows you to receive real-time updates when the price of a specific cryptocurrency reaches a certain threshold. Price alerts can help you identify potential buying or selling opportunities and stay informed about market movements. Emotion control. Emotional discipline is essential in cryptocurrency trading. Market volatility can lead to rapid price fluctuations, and it's important to make decisions based on analysis rather than emotions. Avoid impulsive trading based on short-term price movements and stick to your trading plan. Compliance and tax considerations. Understand the regulatory environment and tax obligations related to cryptocurrency trading and investing in your jurisdiction. Ensure you comply with any legal and tax requirements to avoid any potential legal issues. Remember that cryptocurrency trading and investing carry risks, including the potential for significant losses. It's important to invest responsibly, diversify your portfolio, and only invest what you can afford to lose. Consider consulting with financial professionals or advisors with expertise in cryptocurrencies if needed. This is it for today's video. What do you think about our video? Feel free to share your thoughts in the comment section below.